So what could the return of market volatility, low oil prices, and no inflation pressure mean for the Federal Reserve and its timetable for raising rates? Steve Liesman has more.
The nation's inflation rate fell to the lowest level in more than 5 years, propelled by crashing oil prices. That was expected. What's more interesting is that when you take out food and energy, the so-called core index, inflation still fell, and that presents a challenge to the Federal Reserve. Headline inflation falling 0.4%, making a year-on-year change of just 0.8%. The core rate was unchanged on the month, and the year-over-year rate a low 1.6%. Gasoline prices plunged 9.4%, and airfares also fell 5% according to the report. Apparel, apparently there were some sweater discounts over Christmas, falling 1.2%, but prescription drugs rising nearly a percentage point. The Fed is watching the core rate very closely, looking beyond the oil price decline for signs of whether inflation is moving further away from its 2% target, a target it hasn't hit in about 2 years. The puzzle is that unemployment has fallen, and yet there is no sign of inflation. In fact, low bond yields are a sign that the market sees little or no inflation on the horizon. Wage gains have been muted as well, even falling in December, and there are concerns that overseas economic weakness and outright deflation could end up affecting the United States.
We can't keep the rest of the world afloat. The rest of the world is probably what's going to bring us down.
Unless there's some sign that inflation is moving towards the Fed's 2% target, or that wage gains are accelerating, the Fed could put off rate hikes planned for this year.
The Fed is going to pull the trigger when you start to see wage increases. If things continue to slow, they're not going to hire. And if they're not going to hire, wages aren't going to go up. And if wages aren't going to go up, the Fed is going to be on hold longer than people think.
Meanwhile, consumer confidence soared, in part because of the inflation numbers, so there is an upside to these lower price increases.
Low inflation is terrific for consumers, and now we're getting a free stimulus plan called a 50% plunge in oil prices.
And one more bit of news. The Social Security Administration waits for the December number to calculate the cost of living increase for 2015. The 64 million Americans who receive benefits will get a 1.7% hike because of the CPI, and that's equal to last year's rate. For Nightly Business Report, I'm Steve Liesman.